Hello everyone and welcome. I am Talat Hafiz and I will be moderating today's webinar hosted by the Communication and Financial Knowledge Center of the Ministry of Finance and the National Debt Management Center on policy responses to COVID-19 Saudi Arabia, a sustainable investment ecosystem. With no further delay, I would like to briefly introduce our speakers. Joining us today, Mr. Fahd Saif, President of the Saudi National Debt Management Center, Ibrahim Aswayel, Deputy of Investor Services, Saudi Ministry of Investment, Stephen Grove, Governor of the Saudi National Development Fund, Samir Assaf, Chairman, Corporate and Institutional Banking, HSBC, and finally, Terence Kelly, who's the Global Head of Official Institutional BlackRock. Mr. Fahd, I would like to ask you my first question. Let me start with you. Could you please tell us a bit about the National Debt Management Center and the recent development on the Saudi Arabian's fiscal policy as well as the 2020 funding plans? Please go ahead.
Thank you, Mr. Talat, and I would like to welcome our respectful guests, and also would like to thank the Communication and Financial Center at Ministry of Finance to host this event. And thank you for the question. The National Debt Management Center has since establishment raised around 761 billion Saudi riyal from the international and local market in Saudi riyals, in US dollars, in euros, with total of 45 transactions. 35 of them were local issuances and 10 as international issuances. The tranches have been ranging from 5 to 40 years in the dollar market, 8 to 20 years in the euro market, and 5 to 30 years in the local market denominated in Saudi riyal. Recently, we've been able to develop the local market with the support of other institutions, where we've been able to extend the yield curve up to a point where we were able to succeed in 5 issuances on the 30-year bucket with a total of 38 billion. The National Debt Management Center has attracted more than 1,300 international investors, and some of them are in this call, and we do value the relationship, and the geography diversity has been across 67 countries through our international program. And it is very active when it comes to customer engagement through roadshows and investor trips, and also quarterly interactions with our valued investor base. The National Debt Management Center has been recognized by international institutions and partners as the pace of the work and the development of our engagement in the international debt capital markets, and also the engagement of developing the local market. In addition to DCM activities, the NDMC has incubated recently a government alternative funding division tasked with various private sector support programs and establishing sovereign ECA, which is Export Credit Agency Funding Program, of which we have recently signed MOUs with respective export credit agencies of France, Italy, and South Korea. We will be closing our inaugural ECA transaction very soon, and we hope to continue with the same success in the ECA market as we have seen in the debt capital markets. With regard to the fiscal policy, the Ministry of Finance has demonstrated in 2020 budget and recently announced austerity measures. Saudi Arabia is fully committed to consolidating its public finances and is striking the optimal balance between supporting the economic activity while being fiscally prudent. To this end, the government has announced a set of targeted stimulus measures to tackle the immediate impact and the immediate need for the private sector and households. However, it is important also to note that there is, for the most part of these stimulus packages are temporary, and as such will not have a long impact on the kingdom public finances. Furthermore, many of the measures have been coordinated with other public sector's entities, such as SAMA and National Development Fund, and my colleague Steve will be illustrating their efforts into that end. And as such will have a limited or no direct fiscal impact. The government has also announced significant expenditure reductions to offset COVID-19 emergency-related spending and lower oil revenues. On the funding side, Saudi Arabia enjoys a vast funding flexibility despite ongoing external uncertainty underpinned by its exceptional balance sheet strength. The government reserves at SAMA stood at circa 470 at the end of March, and there are also substantial broader public sector asset pockets. In addition to January issuance, the recent April $7 billion issuance, which was oversubscribed 7 times, it's a testament to the ongoing international capital market access and intact investor confidence. At the same time, deep and liquid domestic markets are also able to absorb additional financing needs, with a number of new investors entering the market, such as pension funds, mutual funds, discretionary portfolios, local and foreign asset managers, among others. It is also worthy to note that in the early 2000s, the Kingdom debt to GDP exceeded 100%, and all of it was funded through the local market. Given this flexibility, the Kingdom seeks to be opportunistic in its financing approach. In response to the crisis, NDMC stands ready to upsize its issuance program and could increase borrowing in 2020 by a maximum or a circa of 100 billion, in addition to the announced 120 billion earlier in the year, with a total of 220 billion riyal. We have been able to structure the extraordinary annual borrowing plan to be diversified between public markets and private markets, local and international, and we do have our portfolio measures that we ensure that the debt sustainability and the fiscal sustainability are completely retained. The government have recently, as all of you are aware, revised its medium-term debt to GDP self-imposed ceiling from 30% to 50%. It is important to mention that the 50% by no means a target, and the government expects debt to remain well below these levels in the short to medium term.
Excellent. Mr. Fahad, let me ask you a quick side question, but please, within a minute or so, what is the secret of having ever oversubscribed when you talked about the 7 billion being covered like 4 times 52 billion, and also the rates that you're getting a really an extremely good rates in basis point. And what is the secret behind it?
So it is, again, it's a multiple of variables with the partnership of our financial institutions and investors, and also being able to articulate the policies that has been enacted by the government, which is transparency, credibility, and reliability. We've been able, as any top-class debt management office or the National Debt Management Center, to share our annual borrowing plan, the supply between local markets and international markets, ensuring that we are able to communicate our future plans to investors to avoid surprising them. We are very much aware of how much of liquidity in each bucket, and we usually and continuously consult these with our investors.
Good. As a matter of fact, you indicated while you were speaking the government measures. What I would like to ask you also, how the Saudi government respond quickly with this uncertainty, of course, to the challenges facing different sectors affected by the COVID-19, including the recent announcement. Would you tell us more about these measures, please?
Sure. So the government of Saudi has demonstrated outstanding reaction capacity by articulating a targeted, broad-based policy response to the crisis. To this end, the authorities have acted with utmost urgency and on all fronts to tackle the medical emergency, mitigate the negative impact of the shock, and position Saudi Arabia favorably out of the COVID-19 cycle. I would like also to know the Ministry of Health in their daily COVID-19 updates have revealed that the cases in the kingdom, more than 50% have already recovered. On the fiscal side, the government has taken decisive action to mitigate the pace of fiscal deterioration risk through a variety of stimulus programs announced previously. The previously announced set of measures included a first wave of spending cuts approved in March, amounting to circa 50 billion and mostly driven by administrative and operational saving, as well as second wave of spending cuts announced in May, reaching a circa of 100 billion. These are inclusive of the cancellation of the cost of living allowance starting in June, all this comes in addition to the budgeted expenditure reduction in the 2020 budget. I believe Steve will also be able to give us color on the recent measures from the National Development Fund perspective. The recent measures give the kingdom enhanced spending efficiency and a better framework, have a institutionalized framework, have allowed the government to rapidly identify spending reallocation and rationalization opportunities.
Good. I'll come to Steve later, but I'll be moving to Ibrahim. Ibrahim, hi again. Under such difficult and challenging circumstances, as a matter of fact, the Ministry of Investment has launched the COVID-19 Response Center and has been active in connecting with investors. Could you tell us more about it, please?
Thank you, Mr. Talat, and thank actually for the Ministry of Ministry of Finance for actually hosting this event. It is a great honor to be virtually present amongst you today, and I thank you for the invitation and also allowing me to highlight MISA's effort to assist the Kingdom response to mitigate against the economic effect of COVID-19 on Saudi businesses. As the Ministry of Investment, we aim to ensure business continuity during unprecedented times and ensure Saudi Arabia's investment landscape is well positioned to emerge resilient through the COVID-19 pandemic. Our goal is to provide investors and businesses with a dedicated channel to help them access all relevant information and assistance and be a source of trust and support as the Kingdom and our partners across the world comes together to navigate this challenging period. One major MISA initiative is the COVID-19 Response Center, MCRC, through which we have provided 24/7 support to overall investors internationally available and national in the Kingdom for a wide range of services and requests over phone, email, WhatsApp, and our e-services platform. Furthermore, we have launched a series of business continuity webinars as part of efforts to connect with investors and help them find solutions to their operational and financial challenges and update them with the Kingdom stimulus package, also any support packages, any initiatives that the Kingdom has provided over the last few weeks. We have also received international recognition as of that for our swift, efficient action, which is indicative of Saudi Arabia's wider range national response. In its April 2020 publication, UNICTAD Investment Promotion Agency observed report announced that MISA's MCRC initiative is a front runner for the Asia and Pacific region when it comes to best practice for IPA action taken during the pandemic. MISA also published a business continuity guidebook, which covers advice on handling operational risk, commercial activities, and business procedures. MISA also updates a list of relevant contact information for all government entities assisting in our effort against the COVID-19 pandemic on our website. And a key area of importance to us at MISA is to understand the sentiment and challenge of our partners and investors. We have conducted numerous investor surveys, which have prepared us to address significant challenges faced by investors and businesses from over 11 priority sectors.
Excellent. Talking about sentiments, how do you assess your partner and investors' current needs and sentiments, as you just mentioned, and the overall investment appetite when it comes to a long-term potential of Saudi Arabia?
That's a good question, Mr. Talat. Despite the global economic slowdown, Saudi Arabia has demonstrated considerable growth in 2019. And let me just start by saying that MISA, the Ministry of Investment in Saudi Arabia, has been recently actually created by the Royal Decree on the 25th of February, where it was before formally as the Saudi Arabia General Investment Authority. So now with the new mandate of actually being responsible for the investment climate and the regulation and the policy, that has been upgraded as the ministry. So as of 2019, we have actually noticed a huge jump and uptake in number of investments. Over 55% 2019 versus 2018, actually new investments came to Saudi Arabia. Taken on a month-by-month basis, we can see that this growth, year-by-year basis also, we can see that this growth to slow, because of the relevant global market reacted to the developing condition imposed by the pandemic. Major sources of new foreign investments at the beginning of 2020 continue to represent a diverse range of global markets and sectors. Aimed at the economic turbulence of the COVID-19 pandemic, MISA continues to reach out to investors across the world, in the kingdom as well. Several deals have been signed since the pandemic began to make its mark. And we continue to develop and unveil investment opportunities across all sectors, with over 100 launched this week and under the National Investment Promotion Arm Invest Saudi. Our second place rank.
Yeah, go ahead. Continue.
Okay, our second place ranking in Ipsos Global Consumer Sentiment Index for 2020 reflects that both global and domestic investors continue to remain bullish on long-term potential of Saudi Arabia. Therefore, we have confidence that businesses will keep coming to Saudi Arabia as investors actively gains momentum and activity recovers and adapts to the post-COVID-19 era. These challenging times actually have reminded us of the value and sacrifice of essential workers across the country. We are proud to see healthcare and e-commerce companies scale up their services and production of critical supplies to support Saudi Arabia's response to the pandemic. Finally, honoring our G20 presidency responsibility and our determined commitment to the Vision 2030 goals, MISA stand firm to be Kingdom's arm of support to our global and domestic partners and investors as we navigate through these extraordinary times in the spirit of unity, strength, and resilience.
Very good. Good news to hear. I'll move to Stephen. Stephen, regarding the sectorial funding activities and the plans, I would like to ask you, Stephen, what are the recent support measures taken by the National Development Fund to ensure business continuity, particularly in the industrial, agriculture sectors, and other sectors in general? Please.
Mr. Talat, thank you very much. And thank you also to the Ministry of Finance for having me here this evening. I think, briefly, let me talk a bit about what NDF is. NDF is a relatively new organization set up last year that aims at helping coordinate a number of different sectoral development, vertical funds that have been operating in the Kingdom for decades, and try to align these funds and their work behind achieving Vision 2030 objectives, but also, most importantly, behind the efforts at diversifying the Saudi economy. Our total asset base is around $100 billion, and we are playing, I think, an important role at the coalface, if you will, of the country's response to this crisis. And as was mentioned by my friend Fahad, NDF has been working on organizing the response by all of the sectoral funds under its responsibility for a total of about 22 billion rial, or which is equivalent of about $6 billion. And this is focused on a variety of different sectors, including industrial sectors, agriculture sectors, aviation, and transport. And it includes direct support to these firms through debt restructuring, working capital lending, and other instruments. But we're also working directly with commercial banks and non-bank financial institutions to expand credit to SMEs through indirect lending and guarantees, because obviously SMEs are going to be particularly vulnerable in this crisis. And so we focused a lot of our efforts on SMEs. But we're also providing direct support to individuals through employment support functions, as well as through social lending. And then also, lastly, there's an element of food security support that we're involved in to help ensure food supply for the Kingdom.
Excellent. Stephen, you talked about the 22 billion Saudi Riyal as a stimulus packages. Do you have any measures or KPIs, the effect on the 22 billion that's been spent on the sectors? If there is in any way that you could measure the effect of it?
Well, these early stages, it's rather difficult to measure that impact, though we are working with the General Authority on Statistics in a survey that they have developed to try to get a better understanding of what the various impacts of this crisis are on various sectors across the economy and ensure that we're lining up our support behind those sectors. A very rough way also of measuring this is looking at those different programs that have been organized by the different funds and seeing how quickly the funds are being utilized. As of now, of the roughly $6 billion that we have organized, almost 20% of that has been dispersed, and that has gone to close to 4,500 different SMEs across the country. And so we're monitoring that very closely and making sure that we'll be able to respond to the needs as these emerge during various phases of this crisis.
Very good. Quickly, in a minute or so, being a banker, what's NDF's support to commercial banks, SMEs loans, restructuring, and combating unemployment in the kingdom? Any thoughts?
Yes, no, sure. And that has been focused, as I mentioned briefly, on indirect support through commercial banks, through non-bank financial institutions to expand credit largely to SMEs and through guarantees as well. I think another thing that's important to think about is NDF's future. And NDF, as I said, currently is more of a holding company sitting on top of these vertical sectoral funds. Our future plans are to transition NDF into something that's more of a development finance institution, which would again help sort of supercharge the work that we're doing on economic diversification and resilience. But another focus that we would develop over the course of the next year or so is on using this capital and financial instruments to crowd in private investment into infrastructure in the kingdom. And we think that using these types of tools is going to be particularly important in a post-COVID global economy, when government resources globally, obviously not limited just to the kingdom, but globally will be diminished. And so we need to find ways of using existing capital to crowd in private investment, particularly into infrastructure, which will be a strong pillar of growth going forward.
Very good. Samir, hi again. As HSBC, and you're representing the group of HSBC, Saudi Arabia is the largest international investment bank in the kingdom. Could you tell us more about your partnership with Saudi Arabia and its position in terms of markets, economics, projections, and investor appetite, please?
First of all, thank you very much for the invitation. I'm, of course, honored and delighted to participate to this conference. Well, actually, HSBC is the largest foreign investor in the kingdom's financial services sector, and we've been present in the kingdom since the 1950s. And we have a 30% investment in the Bank SAB, and through this 30%, we are the largest single foreign investor on Tadawul. And we have made significant contribution to the development of the kingdom's capital market. When in addition to that, we currently have several billions directly invested in financing Saudi clients in the kingdom, and HSBC employs more than 5,000 people in the kingdom through our subsidiaries and affiliates, including our investment bank, 250 people on the ground. Now, when I look at the economic outlook, well, there is no doubt that the Saudi Arabia is facing an extremely challenging outlook for the next 12 months. We expect at HSBC the GDP to drop by 5.9% this year, probably the deepest contractions ever, and GDP 2021 will remain also weak, but positive at 2.7%. But let me tell you, Saudi is not alone in this bucket, because every other single country in the globe is facing the same challenges, even more. When I look at the UK, for example, will drop GDP by 6.8% this year. I compare to Russia, 6.1% minus. Brazil will be minus 7.3%, and Mexico is minus 9%, and I can go on and on, unfortunately. So Saudi is not alone in this situation. Now, of course, the contraction of the GDP will produce a large government bond government budget deficit between 15 and 20% minus. And the government taxes recently imposed would expect the inflation to rise by 7 to 8% this year. But honestly, when I look at it from an investor perspective, we have actually, and the investor community have strong confidence in the fundamentals of the Saudi economy. First, Saudi is the dominant regional economy and the dominant player in the region. Secondly, Saudi has quickly established itself as a major player in both government bond market and equity market. And just as a reminder, Saudi's weight in the EMBI bond index is 3.4%, and Saudi's weight now in the MSCI index is 2.5%. So no one can be in these indexes if they don't take Saudi very seriously. The third point is that the Saudi, and Fahad mentioned this point, actually has one of the lowest debt to GDP ratios among the key economies of the world. 24% in 2020 first quarter. If I compare it to Brazil, for example, Brazil is at 75%. Mexico is at 47%. There is as well the question of yield. When I look at the rating of Saudi Arabia, Moody is A1 negative, S&P A minus but stable, Fitch is A stable outlook, and compare it to the equivalent countries' ratings, we can see that the Saudi spread gives a pickup actually to the equivalent to the equivalent bonds. And I want to add two more things. Saudi, even though the debt to GDP level for government is low, but actually it's inexistent for the companies that are government owned. So the margin of growth in debt for all these government entities is still tremendous. And lastly, we know that there is other areas of funding that Saudi can have access to, as Fahad highlighted, which are not only accessing the international government bond, but accessing other sources of financing available to the country, which are untapped, which actually would take off the pressure from the need for Saudi to go to the government bond market, and will continue to be a rare signature in the financial markets.
As I understood from what you have said, Samir, that everybody is affected globally, but anyway, Saudi is one of the least affected countries from the economic point of view. The second question that I would like to ask you, in times of crisis, challenges and opportunities rises. From global banks' perspective, what are the challenges and opportunities in Saudi Arabia would you see?
Look, let's face it straight. The Saudi in the short term face the challenge of managing public finance deficit. I just said it will be between minus 15 and minus 20%. The adjustment that the Minister of Finance actually announced recently are steps in the right direction, showing government tackling the short-term problems while remaining focused on the long-term problems. The current crisis has as well showed the need for solutions to challenges that have been present for many years. And for example, the VAT increase to 15% is an ask that the international community, including HSBC, have put at the table through our research department, since 2016. And now it's a step in the right direction, despite the strain that would have on the economy and on the consumer on the short term. Hopefully the other Gulf countries will follow, so we would have a level playing field and there will be no pressure on illegal or illicit border exchange between Saudi and the others. But Vision 2030 must remain the overall goal for the Saudi government. Further challenges for KSA are to manage the short-term stress of the COVID pandemic while remaining anchored to the Vision 2030. An economy actually, which we know is still over-reliant on oil. More than 50% of the GDP is coming from the oil sector. But, encouraging signs, last year we had 3% growth on non-oil in the economy. the economy in Saudi is still too closed, too much state ownership of key sectors. There is as well a crowding out effect for private enterprises, in the sense that, you know, if the government increase its indebtedness, it take it away from what the private enterprises can do. Not enough investment in social infrastructures, sharply increasing government bond deficit and rising inflation is a challenge. But domestic capital markets are developing but have yet to reach their full potential. So the Saudi government has less fiscal flexibility now to pursue all its desired reform projects at once. It must, though, prioritize the most vital while controlling a public finance and reducing the sharply increased budget deficit. And we really believe that it should focus on projects that will provide the best long-term return, reducing reliance on oil, opening up its economy, investing in social infrastructure. But of course, there are opportunities, and the Saudi government can use its significant headroom for borrowing, expanding domestic capital market at the same time. Next month, we expect the Ministry of Finance, and Fahad mentioned it actually, to sign its first ECA loan, the first such product in the region under the green loan principles. We at HSBC are delighted and honored to be able to support the kingdom in undertaking this precedent as such times. Saudi as well can take advantage of the low level of debt among its state-owned enterprises to bring in more external financing for reform projects. There are also potential for PPPs, private-public partnership, to boost growth and reform in specific sectors like renewables, utilities, healthcare, education. And finally, Saudi can open up more its economy to private enterprise. The utility sector, for example, in particular, is available for that, like the Saline Water Conversion Company, National Water Company, Saudi Electricity Company.
Okay, Samir, if I have time, I will come back and ask you what is your thinking about the global, what should be done to deal with the COVID-19. Hi, Terry. Terry, the COVID-19 has impacted the world, definitely, on multi-layers. How has it changed the global investment landscape, and what global policy responses have taken place in this regard, please? You hear me, Terry? Terry?
Can you hear me?
I'll repeat again. Yeah, I can hear you now. I have interruption in the sound. Okay, until the sound and the voice has been fixed, I'll go back to Mr. Fahad. I have a lot of questions. Let me go back to Fahad. Fahad, the recent measures from the Saudi government have been physically strong, but in some people's view, economically negative, providing further downward pressure on consumer expenditure. Why should the investment community believe KSA will come out of this crisis strongly? Please.
Thank you. And I would like also to thank Samir, and hopefully Terence will be able to join us after fixing the technical issues he has. But I can assure Samir that we are very much focused on delivering the VRPs. As Samir is aware, the privatization, VRP, and other VRPs relevant to developing the local market or developing the financial sector, including the fiscal balance programs and other programs that we are very much focused to achieve the Vision 2030. And I very much would like to thank him for his comments. Back to your question, the authorities are cognizant that the recent measures announced were necessary and an adjustment was required. That said, the government strongly believes that these are necessary to ensure medium to long-term stability and retain the kingdom exceptional balance sheet strength and buffers. The entire economy is going through, the entire global economy is going through an adjustments with, as Samir mentioned, rating agencies, IMF, research houses, international research houses are all predicting a recession to negative slowdowns in 2020 and beyond. Given this, the government is focused on how to best support the economy to ensure a sharp rebound once COVID-19 impact dissipates. To this end, in addition to the meaningful recent measures, the government has also announced targeted economic stimulus measures that strive to ensure working capital for the private sector and households during the crisis. These include SAMA, 50 billion Saudi Riyal private sector financial support program, and 70 billion Saudi Riyal fiscal stimulus package approved in March. Furthermore, additional measures were announced in April, inclusive of 50 billion Saudi Riyal allocation to expedite private sector dues payments, 30% discount over the value of electricity bill for consumers in the commercial, industrial, and agricultural sector for a certain period, with the possibility of extension if needed, and a minimum salary for self-employed individuals registered in the transport general authorities, among others. The government will also bear 60% of the salaries of private sector Saudi employees through unemployment insurance. Through the scheme, an employer is now entitled to request a monthly compensation payment of 60% of the wage for 3 months, up to a maximum of 9,000. The kingdom's medium-term growth prospects remain robust, underpinned by a sustainable progress made with structural and micro reforms. These have fostered ongoing diversification, as Samir mentioned, and increased investment dynamism. Saudi Arabia was the most improved country globally in 2019. Ease of doing business report, FDIs have increased year over year, and maybe my colleague Ibrahim will elaborate on that, which is a proof of all of the reforms that have happened recently. The government will continue to enhance the business environment and support the development of thriving services, entertainment, tourism sectors, among others. A solid pipeline of investment and measures are continue to come.
Very good, Fahad. I'll go back to Terry. Terry, are you hearing me now? Terry? I still cannot hear you. Hello?
Now? That's so frustrating.
Oh, okay.
Yes.
Excellent. I'm hearing you well. Terry, COVID-19 has impacted the world in a multi-layers. How has it changed the global investment landscape and the global policy response have taken place in this regard? Terry?
Well, thank you very much for the opportunity. I apologize to all our guests.
Terry, we're still finding issues on the voice.
Yeah, issues. Okay, I'll go back, Terry, to you once that thing is fixed. I'll go back to Fahad. Fahad, being a banker again, how could you, how could local banks continue participating in the debt capital market going forward with a revised borrowing plan? They have invested significantly in the last few years. How they will still continue at the same pace without impacting their ability to lend? The liquidity, basically. Go ahead. Go ahead. Hello?
Sorry, I was on mute. Sorry. Can you hear me?
Anyway, being a banker, how could you? You got the question?
Yes, thank you. So
go ahead.
Within the National Debt Management Center, we put a continuous stress testing and exercise that is collaborated between ourselves and other agencies in the system. That includes the Central Bank SAMA and the Capital Market Authority, ensuring that the capacity is there, and beyond the capacity, what is the demand? We don't want to overcrowd the local market, and we don't want to oversupply the international market, and hence we have put together a strategy that we could tap into public market sectors or public markets, including private markets. Saudi banks are some of the best regulated and well-capitalized financial institutions globally, and they have been expanding in terms of both assets and investments. As mentioned earlier, the investor base of the local debt capital markets are not just financial institutions or banks. That was true previously, as prior to the establishment of the primary dealers program, which was applied in 2018. The main investors were financial institutions, AGIs and GREs. Today, the investor base has expanded to include pension funds, local and foreign asset managers, insurance companies, corporates, private banking, thrift plans, retail investors. There is a great collaboration. There is a great collaboration that is happening at the moment between. There is a great collaboration at the moment between agencies, ensuring that we are able to develop the local market and ensure there is more financial inclusion. In addition to them, we've also seen 3 major Saudi Riyal sovereign sukuk-based funds established, and hence increasing the demand and the inclusion. In addition, the borrowing plan includes accessing other local private channels as part of the government alternative financing, which I just mentioned in the opening, which is relevant to the government alternative financing team that could do the ECAs or specific project financing, enabling, as Samir mentioned, the AGIs and the other authorities that are cash producing type of projects.
Excellent. Terry, are you back with us?
So I can hear you. I can hear you very well. I don't know if you can hear me.
I hear you very well. Okay, let's go back. COVID-19 has impacted the world on a multi-layers. How has it changed the global investment landscape, and global policy response have taken place in this regard? Please.
Thank you very much. Thank you for the opportunity to speak. Ramadan Mubarak to all my friends, and happy Eid in advance to all of my friends in the kingdom. Apologies for the technology problem. I would just say this, Mr. Talal, I happen to agree with a lot of what was said earlier by Fahad, by Stephen, obviously by Samir. But the numbers are quite compelling when you look at them. The US GDP will fall 5.6% this year, the CBO just reported, but it will fall 40% in the second quarter alone. We do not, BlackRock does not expect global GDP to regain where it was in the first quarter of 2020 before the second quarter of 2022. Yes, there have been unprecedented policy responses. More than 50% of GDP in the case of the United States, or $10 trillion in total stimulus between the Federal Reserve and congressional responses. Globally, we estimate fiscal and monetary responses to be close to 25% of global GDP. So we've had an unprecedented shock, one that can only be compared to the Second World War, as well as an unprecedented policy response. The problem is with the global economic environment that it will be an uneven and relatively uncertain recovery across the board. Global supply chains are going to be reordered. In many cases, some consumer preferences may be permanently changed. Think of D2C or more virtual conferences like this with less international travel. But when you look at what the challenges are for global investors, at least 3 things are on the minds of us at BlackRock. The first is that global interest rate complex is not only lower for longer, it may very well be lower forever. The United States now joins major economies globally at having its interest rate yield curve close to 0 with the risk of it going negative. Another very important implication for global investors is the need for quality. You must actually be far more discerning in the credits that you are putting into your portfolio. And it is our actual advice that people be up the capital structure. We prefer high quality debt right now to equities. And the third thing that is really important in a portfolio is resilience. You want to find some type of assets that have a less correlation to the rest of your portfolio. Government bonds used to provide this resilience, this buffer, but with long rates where they are, they no longer provide that resilience. So the implications of that for global investors and for the kingdom are very profound.
Good. Terry, where does Saudi Arabia fit in this picture? As you just mentioned, globally, what are the observations from your part on the overall economic indicators?
Well, I think, first of all, thank you again for the question. And again, I will come back to what Fahad, Stephen, and others have said. At the present time, at least with regard to Saudi debt, BlackRock regards them as very important objectives. One is quality. I agree with you, Samir, that as a single A, whether or not it's on watch or not, the case that represents a very attractive investment. BlackRock is currently overweight Saudi debt relative to our other emerging markets or other debts in the same complex. But it's also for us a place, the kingdom, where there's a possibility for resilient opportunities, resilient investment opportunities. And again, I have to agree with my colleagues with regard to the opportunities in infrastructure. I think the recent transaction that took place, the PSA investment in the Dammam port, for example, shows the type of investment which is going to be uncorrelated and yet have a decent return. So I think BlackRock and all of our investors will have our eyes wide open for those type of opportunities within the kingdom. And now with our Riyadh office open and fully staffed, we know we will be watching those opportunities very carefully.
Good news to hear. Ibrahim, global reports on FDI are that investment has effectively halted. What level of FDI have you received over the pandemic, and what gives you the confidence they will return for projects important to Saudi Arabia, which have attracted relatively low level of international investment to date?
Well, thank you, Mr. Talat, for this question. I second actually my colleague speakers to what they said, Fahad, Samir, Stephen, and Tiras also on the level of investment. Again, Fahad actually stated several initiatives taken by the National Debt Office, Debt Management Office, with respect to the investment and the fiscal balance here. Again, Mr. Stephen also talked about a little bit about the NDF and what NDF can give actually the companies and investors on a larger scale, whether it is industrial or any other sectors. Samir talked about the financial capabilities of the kingdom with respect to the credits and the MSC stands, as well as Mr. Terry when he talked about the investment sentiment, etc. I think, again, the kingdom last year has been ranked number 1 in terms of doing business report. The World Bank does business reform in terms of number of reform has been implemented. So this shows how confident is the kingdom and eager actually to move forward in implementing and activating the business environment. That's one. Two, as I said, we saw an increase of 2019 versus 2018, yet this is also continued to happen as of Q1 2020, despite the fact that the pandemic is actually impacting the whole world, yet we are actually noticing a good uptake with our team approaching investors, making sure that actually they are still interested in investing in Saudi Arabia, as well as actually a number of requests coming to invest in the kingdom. So we are noticing a good uptake in this part.
Very good. Stephen, SMEs, as you are aware, that are the most affected in any sort of crisis, whether it being COVID-19 or others. And it's important part of any diversification strategy. They were growing, but relatively in a fragile prior to the COVID-19. What prospects do they have in the post-COVID era? And do you think the BET measures will be will break their recovery, basically?
Well, as far as SMEs, indeed, Talat, you're totally correct that SMEs are going to be particularly vulnerable during this time and during the response. And so that's why NDF and our funds are focused laser-like on support to SMEs, organizing the support across our different funds, ensure that we are providing the kind of support that's necessary to help see them through these challenges. I mentioned how we are doing that through indirect support, but also direct support through restructuring of existing loans, through working capital lending, through a number of different instruments. And so I think it is important to have a focus on SMEs because this is critical to the future of the country, to the diversification of the country, and to the success overall of the vision objectives. And as far as current tax policy goes, it's very difficult to see both what the impact of this crisis will be, and it can unveil itself in a variety of different ways, as it is hard to say, what tax policy impact will be. I mean, there's a lot of different considerations policymakers take into when making these types of decisions. And of course, the needs and demands of the SME sector are taken into account. And I think if you look at other policy measures that have been taken in light of the crisis, looking at relaxing payments on expat workers, looking at other types of support that are being made, employment support, other types of support, a lot of these things can balance out in the long run. So I think it's far too early to make any kind of conclusion about what the impact of any one of these policy measures will be. And we'll certainly have to see how this unfolds over the course of the coming months and year.
Thank you, Stephen. Samir, in a minute and a half, because I'm running out of time, there has been increasing speculation and government comment on negative interest rates. What would be the global impact on this and investment sentiment in case a debt? A minute and a half, please.
Look, the central banks did extremely well to push interest rates as close as possible to zero, and the Western central banks did well to keep them at zero. So I think that this is the right decision, and as well, the central banks did very well the rest of the packages that Terence mentioned to support the global economy. I am clearly against negative interest rates because negative interest rates actually can create a psychological shock at one stand, for the agents of the economy to realize what is happening in the economy. But we have this shock now, and we don't need to enter into the hassle of negative interest rates. As a reminder, savers would have negative carry on their bonds if they are in their pension funds or in their insurance packages. Banks would have, with the negative interest rates, actually would have much lower profitability, and actually would be counterproductive, to having a healthy banking system. And operationally, it's very, very difficult to fix. And if negative interest rates have worked, we would have seen it in the countries like Japan or in the countries from the ECB. But we've seen recently that the ECB actually have not lowered more rates, recognizing that negative interest rates are not producing anymore the right effect. And we have seen Bank of Sweden moving back their interest rates to zero despite the COVID-19. So I'm clearly saying interest rates at zero is fine. The world can function in that, and the message is there. Interest rates negative are very, very difficult to handle, and putting tax on savers actually through the interest rate negative is difficult to continue to sustain.
Very good. I would love to continue on and on, but I'm running out of time. I would like, to come to the end of this webinar. For those asking, a record version of the webinar will be available. I would like to thank, before I close, Fahad, Ibrahim, Stephen, Samir, and Terry for your transparency and for sharing a valuable information. It was great speaking with you all. Thank you, everyone. And hopefully that next time we meet person in person. Thank you very much, and good night, and have a nice night. Thank you very much.
Thank you. Thank you.
Thank you. Thank you.